Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And today we're talking about trading short-term momentum swings using something known as Heikin Ashi candlesticks. I think it's going to be a really interesting discussion. For some traders, they see this as a clearer view of day-to-day activity on a chart. We'll talk about the pros and the cons of Heikin Ashi as an approach. But we're going to be planning and placing an example trade today using a Heikin Ashi example trading system. So before we can get to any of that, though, let me first of all say hello to everybody who's already chatting in. Always great to see the familiar names, great to see some new names. And actually, there's one or two that I know, but I haven't seen them in a while. But hello there, Ricebird, Ted, Will, Rojo, Olga, great to see you again. Kelly, who else is here? Jim, Sharon, JRTR, and everybody else. Thanks for joining us week after week. I always do appreciate your attendance and your contributions to these discussions. If you happen to be among those who are here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream has been concluded, enjoy the recording. It's a great way to watch these webcasts, but you're certainly invited to join us in the live stream audience. And if you'd like to be here, this is a Friday webcast series, and we kick off every Friday, 1 o'clock Eastern Time. I'd love to have you here as a live stream audience member. Now, I also want to let my live stream audience members know that my very good friend, Brett Crowther, is hanging out in the chats with us. Brett and I have been working together now for a couple of decades. He brings a ton of experience to this discussion. He's just going to be keeping an eye on the chats that come in through the YouTube window and any questions that I can't get to during the flow of the presentation. Brett's there to help pick up the slack for me, so thanks for having my back there, Brett. Brett and I would also like to issue an invitation to everybody watching to follow us on social media. You can find and follow us on X. You can find Brett there at Brett Crowther CS. You can find me there at Cameron May CS. And you can also find and follow me on LinkedIn. Just go to linkedin.com/in/Cameron May CS, and that'll allow you to make that connection. So really, the only place to connect with me in between the live streams. But let's get into this discussion. And as we do, yes, of course, trading carries risk. So bear this important risk-related information in mind. This material is intended for educational and informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research. Investing involves risks, including the loss of principal, and any investment decision you make in your self-directed account is solely your responsibility. All right, so let's set the agenda for today's discussion. So we are going to be talking about trading using something known as Heikin Ashi candlesticks. Go ahead and chat in and let me know, yes or no, are you familiar with Heikin Ashi candlesticks or not? Before we get to that discussion, though, I do want to do a quick follow-up on the last trade from our last presentation. I was out of the office for a couple of weeks, so I want to give you a follow-up on that. Then we'll take a look at the S&P 500 to sort of set the stage for today's discussion. Then we're going to get into Heikin Ashi candles. I'm going to talk about how they're constructed, how they're very different from traditional candles, and then we're going to build an example trade system using Heikin Ashi candles and use it to plan and place an example trade in our paper money portfolio. All right, but I'm seeing Olga saying, yes, familiar with Heikin Ashi's JV Texan, no. Looks like some are familiar with it a bit. There's some yeses, some nos. There's somebody saying they're eager to learn. Let's do it. So let's go right to the Thinkorswim desktop platform. This is the paper money version of the software. And I wanted to follow up on our previous trade on NVIDIA. Now, this was traded using a combination of 3 different linear regression lines. So if you need to go back and review that archive to see how this trade was constructed, you can do that. But one thing that I do want to call your attention to here is that the lines have moved since our last discussion. So where we took our entry here, it looks like it's some distance above one of the linear regression lines. It was actually sitting right at a linear regression when we had our discussion. So let me just show you this. If you want to see the archive, I actually have the archive prepared for you. First of all, to find the archive, especially if you're new to these webcasts from Schwab, number one, make sure that you're subscribed to our Trader Talks channel on YouTube. This is where you can go join our live streams. You can also find the archives of previous webcasts under what are called playlists. So I'm going to go to playlists here, and I'm going to scroll down a bit until I can find advanced charting techniques. It's right down here, a little bit beyond the halfway point. And if we click on view full playlist, if you were to just go to my most recent discussion. You'll see James filled in for me, Rachel filled in for me, right back here, building a custom linear regression system for short-term trades. So that was where we set this trade up. And here's a little screen capture so you can see how this is shifted. So here's where candles were trading right near our lower linear regression line as of the time of that discussion. Time moves on. Our technical tools update in real time. So this is what it looks like now. But the original entry was taken right here on March 27th. A plan was put in place to take profits at $186 if price got to that level, or we had a stop down here at 159. Now this stop was never triggered. It was just canceled automatically as part of a one cancels other bracket order. But our target was hit, closed that trade out at 186.22. Go check out that archive if you want to learn about linear regression lines and how we built this trade. But one reminder, since we have a stop order here on your screen, just remember that stops are not a guarantee that the order will fill at a specified price. But let's go have a look at the S&P 500. That was our only position, by the way. If you'll notice, we go over our monitor tab. Here's our advanced charting total list of positions. We don't have any, so we got to start adding some. So let's add one today. But let's go to our charts. I don't know, maybe we can add two. We'll make a decision as we go. But let's have a look at the S&P 500 through our typical lens here. I'm going to go up to our studies and I'm going to load what's known as our trend value momentum or TVM strategy set. So we look for trend using these two moving averages up here. Value is indicated by RSI's position, and then the MACD histogram is used as a potential insight into momentum. So what's going on with trend? Well, the markets have been chopping sideways for quite a while. Our 50-period triangular moving average has been drawing closer and closer and closer to the 100-period triangle moving average, and it has now crossed down through. Now, for some traders who use this combination of technical tools as a confirmation of trend, it may indicate that that trend is under threat. And for a while there, yeah, the trend suffered a bit. Now, price has recovered so rapidly that our moving averages haven't even had a chance to react to that move. But what a trader might do still with the 50 triangular trading below the 100, it might cause them maybe not necessarily to go entirely bearish, but maybe they scale back new bullish positions. So that's probably an adjustment that we'll make in today's trade. We're still going to do a bullish trade, but we're just going to cut the size of that position in half. Maybe add to it later. All right, but yeah, trend, that's kind of a check for the bears at the moment. And for some who are maybe concerned, are we up at near-term highs? Could we be getting a little bit top heavy? That might be a confirmation of those suspicions. Obviously, time will tell how price actually moves from here. But moving down here to value, some traders will look for the RSI to indicate our stocks in the short term. Do they appear to be overvalued or undervalued? Even with a strong trend, they may be looking for areas where they're trying to get in at near-term lows rather than at near-term highs. Right now, yeah, we're pretty high. Now, it doesn't mean we can't go higher. Markets are still attempting to do that right now. We're looking toward another positive close if things hold out where they are at the moment. But our RSI has actually reached that overbought condition. It's gotten up above 70. Right now, it's right at that threshold. This actually would typically, traditionally, be a check for the bears again for RSI. It doesn't mean be bearish necessarily, but for the would-be bullish traders who use this sort of an approach, maybe it's a pause button. Either pause or maybe scale back the new entries, dial those things down. In any case, let's also look at our momentum. Our MACD histogram has really reached as high as it's been because of the strength of this move. This is the highest sort of bullish run that we've seen for the entire last 12 months. And for some, they may hesitate to get in when there's already been so much buying. Maybe they're waiting for a pullback, and our momentum indicator is possibly signaling some weakening of strength among those buyers. Even though it's not otherwise obvious on price, this could be a signal that getting a little bit top heavy. Even adding all this up, kind of a bearish check here, a bearish check here, a bearish check here, doesn't guarantee that prices are going down. Now, if they do, let's just think, let's put ourselves in the shoes of a trader who is waiting for a pullback. Well, how much of a pullback? You'll notice here, I've drawn some Fibonacci's on our chart. Now I'm going to switch up the chart time frame so we can get a closer look at this. Let's switch our time frame from a 1-year chart to a 6-month chart. It's just going to give us a closer peek at what's going on here. And what we see with this Fibonacci is that assuming this advance is at or near a peak, what we might do is draw a fib and then look to see where this might pull back to if it decides to pull back. Where's that first Fibonacci level? Interestingly, 78.6 is right across the tops of previous highs. I think for a technical trader using a Fibonacci, whether it happens immediately or it happens relatively soon, that might be the first level of support where they're looking for, potential new bullish entries. If it breaks down below that, maybe we get down into the 61.8 to 50% range. But let's just say, all right, netting all that together, maybe we think things are a little bit top heavier in the near term. Nonetheless, we're trading literally right at or extremely near all-time highs. Let's still go do another bullish trade. So today, we're going to do that using Heikin Ashi candlesticks. And for our example stock, I'll show you how I found this in just a moment. So we will be running a scan to act as a supplement for today's discussion. But I want to bring up PPL. So here's PPL Corporation. Let me remove our trend value momentum study set. Let's just clear things up, remove all studies, and just look at this through the lens of a traditional candlestick chart. Now, lots of traders use traditional candlestick charts. Now, there are others, though, and even those who trade traditional candlestick charts might recognize that these things can get a little bit choppy. So look at what PPL has been doing over the last 5 months. This is still a 6-month chart. It's been running up and pulling back. It's been running up and pulling back and up and back. But even within those advances, we're still seeing lots of red candles that can be confusing to interpret at the time they appear. We might be looking for bullishness, but even on an upward swing, we're getting a red candle here and a red candle here. Here's an upward swing. There's a red candle here and here and here that might be providing a lot of what we might consider to be sort of false signals. So traditional candlesticks can be very whipsaw. They can have a strong tendency toward whipsaws. Very volatile. Now, another thing that happens is lots of gaps. Gaps can be sometimes used for setting up trade scenarios, but they can also sometimes be a little bit of a distraction to the technical trader. So there's a different type of candlestick that's been constructed specifically to address those two scenarios. It's constructed to eliminate gaps and also to minimize this sort of day-to-day volatility, white to red, white to red, white to red. So let's load up the Heikin Ashi candlesticks. So I'm going to go up here to my chart style. Right now we're looking at just a traditional candlestick type of chart, and I'm going to switch that to Heikin Ashi. And what we'll immediately note is that on advances, those white candles tend to be only occasionally interrupted by red. There are a few right here. On a pullback, those red candles tend to only be occasionally interrupted by white. Let's see, is there an example of that happening? Little couple of them right there during this pullback. But there tends to be much less, let's say, day-to-day noise, the white to red to white, sort of hyperactive back and forth that can be representative of a traditional candlestick chart. So for some traders, they're actually drawn to this apparently greater consistency. Also, what you'll notice is there are no gaps on a Heikin Ashi chart. And all of this relates to how they're constructed. So just like a traditional candlestick chart, a traditional candlestick has 4 data points. It has open, high, low, and close, OHLC. You'll see that right up here, OHLC. Well, with Heikin Ashi candlesticks, they also have an open, high, low, and close, But it's not just purely based on what price did today. There's a different calculation for each of those. So let's talk about how those are determined. All right. So starting with the opening price. How is opening price of a Heikin-Ashi determined? Pretty straightforward. With a Heikin-Ashi, the opening price is always equal to the middle point of yesterday's body. So maybe if I zoom in here just a little bit, you'll notice here's today's open. This is a white candle. White just implies that we've gone up since the open. Red implies that we've gone down since the open, just like a sort of a traditional candle. So the open is right here at this level, and you'll notice that goes right through the middle of yesterday's candle. Yesterday's open was right here, and that goes right through the middle of the previous day's body. Let me be explicit there. It's the midpoint of the body. It's the middle of the open and the close. Okay? So that's the opening value, and what that does is that eliminates gaps. There are no gaps. Not going to see them on Heikin-Ashi candles. So with apologies to gap traders, this is not a candle type that would lend itself to trading gaps. So that's the open. Well, what's the close? Well, with a traditional candle, we know what the close is. It's a closing price. But is there something magical about the fact that just happens to be where the last trade went through right before the closing bell? Well, for a Heikin-Ashi trader, that closing price doesn't carry enough weight conceptually. It doesn't represent a lot. So it really is just a point in time when we stopped trading. So the close on a Heikin-Ashi actually takes all 4 points of data into consideration. What was the opening? Well, yes, actually, what was the closing price, but also where did price open? What was the high and what was the low? We take the open, high, low, and close, add those up, divide by 4. That gives us sort of an average of what prices did today. And then what this candle does is it shows where we stopped yesterday, well, where the middle of yesterday's trading was, and then what did average prices do today? So it's kind of a heavier weighted movement of what's happening from day to day, not just from point to point, but sort of from average to average, if that makes sense. All right, so that's the open and that's the close. What about the high and the low? Let's talk about the high first. So the high for each day is, as an example, let's use, let's use this one. The high for each day, we take the opening price, and if the trading never got back up to that opening price, that becomes the day's high. So it's the higher of the middle of yesterday's trading, or in other words, the open for the Heikin-Ashi candle today, or today's actual high price. Now the low is just the opposite. Our low, if we were to look back here at maybe a white candle, we take the opening price of the Heikin-Ashi candle, and let's say we have a strong gap up in actual trading. If that never gets back down to the low, if it never gets back down to the opening price, that just remains the low of the candle. So for lows, it's the lesser or the lower of the opening price for the Heikin-Ashi candle or the actual low price for the trading day. So that's how the candles are constructed. And the net effect is this much cleaner appearance on a chart. So let me just zoom back out here again. And for some traders, they just use this as they're just looking for sort of an average change in price over time. And they use that to construct trading systems. So let's talk about, let's see. Barbara says, are there circumstances where this type of candlestick gives misleading information? It's not working better at viewing trends than regular candles? Absolutely, Barbara. It's a great question. I'm not saying that this is a flawless improvement on traditional candlesticks. It's a different way to view to view a day's trading, but it doesn't necessarily, just like with any technical tool, it's not going to carry a guarantee from trade to trade of improvement. There are lots of approaches that we've tried. We place a trade and the trade doesn't work despite our best efforts. That's just part of trading. Yeah, it's a great question there, Barbara. Thank you for asking it. But let's talk about, Ricebird says it sort of creates a look of trend. Yes. Yeah. Yeah. Let's talk about the different types of these candles. And there really are just 5 types. You know how, with traditional candles, we have lots of different candlestick names that are assigned. You've heard maybe of haramis and dojis and tombstone and hammers and hanging man and shooting star and all these different candle types. We don't apply those to Heikin-ashi candles. There are really just 5 types of Heikin-ashi candles. There are bullish candles, and there are strong bullish candles. There are reversal candles, then there are bearish candles and strong bearish candles. So let's talk about those. So how about we just talk about the ones that always seem to be the most fun to talk about, and that is a bullish candle. So a traditional bullish candle is actually very much like the one that we have right now today on PPL. It's where we've had a series of red, then we get a white candle. The white candle typically has a long body with just a little bit, let me zoom back in on this. I think it's just going to be easier to see this. It's a longish body with a little bit of a wick sticking out the bottom. But yeah, white with a little bit of a wick sticking out the bottom, that is a bullish candle. Now a strong bullish candle is when we still have a white candle, a tall white candle, but there is no wick. Look at this. There's not a wick here, not a wick here. There's not a wick here or here or here or here or here or here. What does that tell us? Well, because of the way these are constructed, what that literally means is that all of today's prices never even managed to go down to the middle point of yesterday's candle. That's what it means. It means that prices have remained strong enough to not even get back down to average from yesterday. So when we start to see a series of these, they are actually sometimes called a trend. Yeah, but really specifically referred to as a bullish, a strong bullish candle. So here we have this stock trending upward, just white candle after white candle after white candle. Well, eventually that ends, right? It'd be nice if we kept going up and up and up. But what traders will typically look for as a sign that things are slowing down and maybe about to reverse is a small bodied candle with a long wick sticking out both sides. Yes, in traditional candle talk, we'd refer to this as a doji, but with the Heikin-ashi candles, we just refer to this as a reversal candle. When we get that smaller body, but in particular, the real thing that sort of identifies these is when we get longer wicks sticking out the top and the bottom. So I don't know if we want to expend too much emotional energy saying, well, does this still count as a small body? Because this is a smaller body. Well, this might very well be called a reversal candle. This still might very well be called a reversal candle. That very well might be called a reversal candle because they all have these longish wicks sticking out both sides. Just kind of means that things are not as decisive anymore with the way we're getting trading on an intraday basis. Maybe the traders are getting a little bit more wishy-washy and possibly ready to reverse course. So after that reversal, we start to see some bearish candles. Shorter wick sticking out the top. There's a short wick sticking out the top. There's a short wick sticking out the top. These 3, I think we might call bearish candles, followed by 2 strong bearish candles. Okay, Art says, which particular white candle is an entry candle? Art, it's a good question. You got just a little bit ahead of me. I just wanted to identify the different types. But is everybody comfortable with bullish, strong bullish, reversal, bearish, and strong bearish? So yeah, so there's a reversal. Notice the long wick sticking out the top and the bottom. Notice color doesn't necessarily matter. Strong bearish, strong bearish, strong bearish, strong bearish. Oops, I would still call this a reversal. A little bit longer body, but big wick sticking out the top, big wick sticking out the bottom. And then we get a white candle. So depending on which way the trader's attempting to trade, a reversal candle followed by a new color is the signal, right? So in other words, if we're coming out of a red trend, we get a reversal followed by a white candle. There's our entry. Is that making sense? Well, an entry actually for some is adequate. They might just look for reversal followed by a white candle and then just trade as long as we stay white. And if we get a reversal, trade's over, especially if that reversal's of the opposite color. But for others, they like to recruit other technical tools available to them. And one thing that can happen with, let me zoom back out here again. One thing that Heikin Ashi's, some traders think it does a really good job of, is identifying flagpoles for Fibonacci trading. Gina says, does this work better with trends? Well, better is kind of a qualitative phrase. It's a good question to ask, but I can't ever say whether this is better or worse, because that might imply that that's the way that someone ought to trade. What I can talk about is typical approaches, and then my audience is left. You can experiment with it on your own, decide if it's going to play a role in your trading ever. This is never a sales pitch for a specific approach, and I don't want to give the impression as an educator, because that's my role, that someone ought to be doing this in a prescribed way. I don't like to say, ooh, I like this happening, or this indicator is better for whatever purpose. FibZone says, is this just as accurate on a 1 week chart? Here's what I can say about time frames. This technique, like just about every other technique, is portable from one time frame to the next. So we could switch this to an hourly chart and trade Heikin Ashi candles. We could switch this to a weekly chart, trade Heikin Ashi candles. Is it a guaranteed performance on any of those time frames? Nope. It comes with its own set of potential advantages and its own set of potential disadvantages. No matter how a trader approaches a chart, there's still the possibility that despite all their best efforts, the trade could go south on them. But what some traders do like about Fibonacci's, about Heikin Ashi's, is that they seem to give a clearer idea of where a flagpole might be on a chart. And I'm talking about Fibonacci trading, which is when a stock goes for a run in one direction or the other in a straight run. Now, straight is kind of in the eye of the beholder. Again, if I switch this back to, let's just go back to a candle, traditional candle, you can see all those red lines can kind of present sort of a visual choppiness to the chart. And it might cause the trader to struggle to identify where are their advances sufficient enough to call them maybe a flagpole for, let's say, a Fibonacci trade. When I switch this back to a Heikin Ashi candle, though that cleaner appearance might make it a little bit easier to recognize and trade Fibonacci. So that's what we're going to be doing today. What I notice here is that we had this straight up uninterrupted series of white candles from, it looks like about 36.5 all the way up to about $40. So there's about a $3.50 run, which is about a 10% move on a $36.5 stock. And then we might just look for a pullback of traditional proportions with a Fibonacci. So how about we do this? Let's apply a Fibonacci. You can see I already have the tool prepared down here. But I'm going to apply a Fibonacci by clicking up here at the top and pulling down to the bottom. And what a typical Fibonacci trader might be looking for is when a stock runs up, they're looking for a pullback of at least typically 61, hitting the 61.8, maybe pulling down to the 50% level. In this case, we got a pretty steep dive. We got almost down to the 23.6, but we've gotten back up about above that 50. So this might still be tradable, even for a Fibonacci trader who doesn't like to see it go down quite that low. Now there's another stock. Let's switch over here to Newmont. Here we see, still looking at Heikin Ashi candles. We've just had an earnings announcement. It appears to have been well received by shareholders. And that's after an advance followed by a retracement. And you might be wondering, Cameron, where did you come up with Newmont Corporation? Well, same search or scan that I'm going to be showing you here in just a moment. But in this case, we had a run up to about 122 from a low of about 94.5. So let's just draw in our fib there. This is kind of interesting. This hit a peak after a series of white candles. There's a couple of reversal candles followed by a red. So we've come down to the 50% retracement line. So touching off that 50% followed by a white candle for a Fibonacci trader, that's just sort of a traditional entry signal. So let's say we're going to take this trade. Where would we exit? Well, we might exit up at the next Fibonacci extension line, up there at 139.5. We could also make a plan to exit if we see this could be an exit for a trader of Heikin Ashi candles. If we can at least get to that 100% line, any subsequent reversal candle might be a signal to take the exit. Okay, let me see what questions have just come in. Zink says, how do you interpret candles switching from bearish to bullish and vice versa? Would this happen in a sideways trend potentially? Well, with Heikin Ashi candles, again, what we're looking for are a series of candles of one color or the other. And if we see a reversal candle, typically if we're seeing a series of white, if it's a red reversal candle, it might carry a little bit additional weight. But even a white reversal candle might signal that something's underway. But it's a reversal candle followed by the opposite color from the previous move. That's how we would interpret switching from bearish to bullish and vice versa. Okay? But I think this might be our example trade, but it's not going to be fair to do this trade without showing you where I came up with these stocks. So what I did is, let me just read. Oh, there's one other question. Oh yeah, Cameron says, would the same rules apply when I'm looking at a 1-day or a 5-day chart? Well, so if you're just talking about like a 1-day, 1 minute, or a 5-day, 5 minute, yeah, the Heikin Ashi candles would be traded very similarly, just, yep, on shorter time frames. Kelly says, is there a way to correlate actual candlestick price to the Heikin Ashi candle chart? Not in any way other than what I described, Kelly. So if we understand how it's constructed, there are some data points that are lost in the Heikin Ashi candle construction. So yeah, for example, when I'm looking at a bullish Heikin Ashi candle, I can't see where the actual price low was for that day. When I see a strong bullish Heikin Ashi, that's a data point that is lost in the way that these are constructed. It's not displayed on the chart in any way. So you'd have to go back and you can switch back and forth, but I think that might make things a little bit muddy pretty quickly. All right. But let's go run a scan. So how about we run a scan for stocks that are exhibiting a similar characteristic to what Newmont Mining and PPL have been doing. Maybe they're stocks that have been moving up recently, but pulling back down to lows and possibly bouncing. So I've constructed a search. Let me show you how I built this. I'm going to go over to the live trading platform. Don't try to do this on Paper Money because it will not work on Paper Money. This is just an example. It's still a fake live account, but it has the functionality of a live account. And I've gone to the Stock Hacker scan tool, and I've just reset it so it's just a nice clean. This is just the basic starting point. Now, we are not going to be using any of these stock default metrics, so I'm just going to close those out. X, 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 and they're gone. Instead, we're going to be using 3 study filters. In other words, technical study filters. So I'm going to go up to Add Filter. I'm going to click 1. I'm going to click 2, and I'm going to click 3. So the first one is we're going to filter just to make sure that we don't wind up with a bunch of stocks that are down at bottoms or they've just been going down for a long time. So the first requirement I'm going to have is that we are near, let's go to our study. We're going to go to price performance, and we're going to go to near high lows. And let's just require that the current price is at least in the top, let's say 20% of all trading prices, or it's within 20% of the 1-year high. Okay, so the current price is within 20% of the 252 period. What is 252 periods? Well, it's 252 days. That's how many trading days we get in a typical year. So yeah, so we're within 20% of the 1-year high is what this is requiring. Next up, we don't want to be all the way up there at highs. We'd still be sitting around waiting for a pullback. So now we're going to get a little bit fancier here. We're going to put in a custom study requirement, not using the ADX crossover. So I'm just going to delete that. Instead, we're going to add our own condition using price. So we're going to require specifically that a close or a current price is less than, coming down, less than a price from a little while ago. How long ago? Well, we're going to look for the low price from 10 days ago. That's what this offset means. When it says offset, it basically means 10 days ago, using a daily candle or a daily chart. So if I click save here, you'll notice now it's just saying, so the close, or if we haven't closed yet, the current price is less than the low from 10 bars ago. And if we're on a 10-day chart, 10 bars ago is going to be 10 days ago. So we click OK. Next up, we're going to do the same thing, but require that we're coming up from yesterday. So down from 10 days ago, up from yesterday. What does that sound like? Does that sound like maybe a pullback from a bull flag? Yep, let's do that. Let's click delete here. Let's add our own condition. This is just sort of repetition of what we just did. It's just we're going to use a different set of different number of bars. So current price, the close, is greater than the price high from yesterday or 1 bar ago. So I'm going to click save, and you'll notice right here it says, so the close or the current price is greater than the high from 1 bar ago. So it's going to be above yesterday's high. Now let's click OK. Now I will say as we run this search, this is not looking at, I'm not saying the close of a Heikin Ashi from 10 bars ago or the close of a Heikin Ashi from 1 bar. These are just traditional prices. Just the stock price. Doesn't have anything to do with candles. All right. But I'm just going to click scan and let's see what we get. And what I'm looking for, and this is why I always do this before a webcast starts, because sometimes this looks like it's going to be a little bit finicky. It take a little bit of time to load. I always do this before a webcast starts because sometimes when I'm running a live stream and I try to run a scan at the same time, puts a pretty good drag on the bandwidth and I can't get it to load up. Anyway, you know how this works. We're going to run the scan. There's going to be about, I'll say about 10 stocks that show up here if it's anything like it was an hour ago. But but that's the scan that I constructed. Oh, no, it's not. I forgot one thing. Hit the pause button. I skipped one thing. I didn't scan in all stocks. Instead, I only ran my scans for the S&P 500. Let's see if that cleans things up. Maybe the system's having to overthink. That's what the issue was. Yep. So we're running the scan just for the S&P 500, looking for stocks near, within 20% of 1-year highs, but recently pulling back, but bouncing. That's what we're looking for. And we have DOC, we have D. Look at this, PPL. And, oh, did NEM move? I think it got dropped for one reason or another. Maybe it pulled back a little bit too far from the 1-year high. I'm not sure. But there's PPL, but let's go place a trade. Let's go to our trade tab. There's our Newmont Mining pullback, bouncing. Where might we take profits? Well, we could target 139, but I think what we'll do is let's just have a plan. Let me do two things here. I'm going to make an oval around today's candle so that we know this is the day we bought. And then I'm going to make a note for us in future webcasts. Exit. How about we just say sell? It's just a stock trade. Sell on reversal candle above 100% fib. There we go. So that's just going to be our plan for when we take profits. Now, are we certainly going to get above 100%? I don't know. Time will tell. We're looking to get out anywhere above here, but it's possible the stock might just fade. That happens. We can make our best efforts, and sometimes it just fades. So where do we take losses? Well, with a Fibonacci plan, we typically set a stop just down below that pullback, or with a bull flag plan, we'll typically set an exit just below that pullback. So maybe if we come down here around that 38.2, possibly, let's say we exit at 105. Lola says, can we share the scan? JDS says, share the scan. Yes, I definitely can. Let's go back. Not this one. We need the other one. Let's come up here. Let's share the scan. Let's give it a name. We'll just call it, this is how it's spelled, Heikin, not like that, Heikin Ashi Bounce. That's what I'll call it. And I'm going to click share. And let's pop this into the chat window. Now, as I do that, quick reminder that shared scans are not guaranteed as to timing or accuracy, but I'm also going to add that to my session notes over here to my right so I can remember to put that down in the description. So those of you who are watching on the archive afterward, you can just scroll down through, kind of dig through my description, and you'll see I'll have it labeled something like, here's my Heikin Ashi bounce scan. All right, and I'll have the link there. So when I share a link, since not everybody knows how to use these links, here's what you'll do. When you get that link, you come up to a little gear icon and open that shared that item. Just pop it in here, click preview and import, and that's just going to add this scan to your platform. And it's the live platform. Won't work on paper money. Don't try to import it into paper money. But then you'll just be able to go up here and load that scan. If you go to personal, it'll just be here in your list of personal scans. All right, but there we go. Let's go place our trade, though. We need a plan. We need to make sure that we're comfortable with our plan. So the plan is going to be sell if we can get up above 100%, the 100% fib, and sell on a reversal candle. Or if we drop down here to 105, we've broken through the low of our flag pattern. We've broken through our 50% retracement. Time to get out. So let's go to our trade tab, and we're going to scale back the size of this position. So let's say the trader typically puts $10,000 into a trade. Maybe with what we saw on our trend value momentum system when we're looking at the S&P 500, we saw the crossover of the 50 over the 100 looked like our trend was under threat on the S&P. Our RSI was kind of top heavy. Our MACD was turning down. Let's just do 5,000 in an example trade today. So let's see. 5,000 bucks divided by approximately $120 per share is going to be about 42 shares. So let's just buy 42 shares, but I'm going to put that stop in place at 105. So we're going to right click, put in a custom buy order with a stop, and let's buy, I believe it was 42 shares. We're going to sell those 42 shares at a stop, good till canceled, of 105. There we go. And I think what we'll do with this order to try to get a quick fill, let's put in a market order. Obviously, there are risks when placing a market order. We might not be thrilled with the price received, and a stop is not a guarantee that we'll sell at a specific price. But let's click confirm and send. Buying 42 shares of NEM at the market. Going to sell that at a stop of 105, or if we can get up to a reversal candle above 100% fib. There's no commission on this trade, but there can be on some types of trades, and we're going to send that order off, and we'll let it work. Should fill pretty quickly with the market order. But in any case, there it is. In any case, we've accomplished what we set out to do today. I wanted to talk through what Heikin Ashi candles are, how are they constructed, how might they be used to identify or to construct trades for stocks just using short-term momentum swing trades. So we even built a scan to look for example setups. So I think this was an interesting discussion. If you'd like to revisit it, just remember that you can find each of our live streams. You can find the vast majority of our previously discussed webcasts on our YouTube channel. So if you haven't subscribed to our YouTube channel yet, make sure you do that. Click on the subscribe button. It only takes a second, doesn't cost anything, but this is where you can join our live streams, find those playlists. Also, make sure you're following your favorite presenters on social media. You can find and follow Brett and me on X. You can find Brett there at Brett Crowther CS. You can find and follow me on X at Cameron May CS. There's my handle on CS. And if you reply to me on social media, I just try to reply right back to you. It allows for interaction. It's not otherwise available when the camera's not running. All right, so you can also find and follow me on LinkedIn. Just go to linkedin.com/in and then /Cameron May CS. That's my handle. Give me a follow. And if you reply to one of my posts here, I do reply right back to you as well. All right. But everybody, time for me to let you go. Thanks for giving me your time today. It's always appreciated. Thanks for all the thumbs up. 167 people watching the live stream right now. And it looks like 45 of you have already clicked that thumbs up. That's always appreciated. That's like applause for your presenter. It also gives me a nice boost in the YouTube algorithm so more people can find my webcasts. So thanks for doing that. But I'll let you go. Go enjoy the rest of our webcast today. Have a great weekend. I'll see you in a future webcast. I'll also look for you on social media, on X and on LinkedIn. But whenever I see you again, until that moment arrives, I want to wish the very best of luck. Happy trading. Bye-bye.